Hi, this is Congressman Brad Schneider. I want to welcome everyone to our call today and thank you for joining us for today's webinar. My staff and I have heard from hundreds of small businesses who are facing the current economic uncertainty and are looking to the federal government for help. Today's call is focused specifically on the Paycheck Protection Program, PPP. This is a loan program that allows for 100% loan forgiveness if you keep your employees on the payroll. If you have questions about the SBA disaster loan program, I encourage you to watch the webinar we hosted two weeks ago on those resources. There's more information on that webinar and other resources available to you on our website, schneider.house.gov. Again, just for reference, our website is schneider.house.gov. Moving to today's subject, the PPP, I'm keenly aware that the administration's rollout of the stimulus funds has been anything but smooth. Many of you have raised concerns about the Paycheck Protection Program and how to access funding, in addition to helping navigate this process. My hope is that this call provides me and my staff with questions for the Trump administration to ensure a more smooth rollout of the stimulus going forward. I believe it's accountable for an effective administration of these resources. It is Congress's responsibility, and we are doing as much as we can and doing it in a bipartisan way to establish the authorities and provide the resources. As you know, the CARES Act that passed on March 27th in the House was signed thereafter by the President, provides $2.2 trillion, including the $349 billion for the PPP program. So we will continue to do that, but the implementation becomes critically important for it to have the intended effect. I want to now introduce our panelists for this call. As you know, the federal government in Washington is establishing the guidelines. The hard work is done here locally. The folks in the field are working tirelessly day and night, trying to make sure that the relief, the response, the aid that Congress passed gets to the field, working with the guidance they get from Washington. Today, we're joined by Bo Steiner, the District Director for the Illinois Small Business Administration Office, who was with us 2 weeks ago as well. He presented at that webinar on the SBA disaster loans. He is an excellent resource. Bo and all the SBA staff in Illinois have literally been working around the clock to implement these programs, and we are very, very grateful. Before I turn it over to Bo, I want to discuss some of the work Congress has done up till now to help businesses like yours weather the current crisis. The first piece of legislation was in early March. It was emergency legislation related to COVID-19, including significant funding focused on public health resources, money for the National Institutes of Health to do research into treatments, cures, and vaccines, but it also included the designation of the coronavirus as a disaster under the SBA's disaster loan program. Under this program, Illinois small businesses and nonprofits are now eligible. You can now apply for these loans, which offer as much as $2 million towards capital, like payroll, towards working capital for things like payroll, rent, and benefits, including an advance of $10,000 emergency funding within just a couple of days. And again, we had that seminar a couple weeks ago, and it's available at schneider.house.gov. Later in March, in the middle of the month, we passed the second emergency legislation, the Family First Coronavirus Response Act, related to the virus. Included in this bill were provisions to provide paid medical and family leave for workers directly affected by COVID-19. Businesses with fewer than 500 employees would provide this emergency benefit to workers and would be able to recoup 100% of the cost through a refundable tax credit. There is more guidance on our website on this program as well. Again, that's schneider.house.gov. Finally, on March 27th, the House passed and the President signed into law the CARES Act. This is the $2 trillion economic stimulus package I mentioned earlier. Within that is the almost $350 billion in direct funds for small businesses, most significantly under the Paycheck Protection Program. This is a program that provides a loan that can be 100% forgiven if the business owners retain their employees. This legislation includes funds to support state emergency operations as well. and in addition is providing $100 billion in support for our healthcare infrastructure, in particular trying to get the ventilators and the desperately needed PPE available. As well, it also provides increased food security and resources to promote remote learning. Any of you who have kids in school doing remote learning can understand the need for that technology. I'm going to turn it over now to Bo, who will give us his presentation on the SBA programs. Many of you sent in questions, which will be the focus of the second half of our call. You can also pose questions in the chat box, and we can get back to you. We have about 250 people on the call, probably more since I started talking, so we won't be able to answer every question, but if you do have a question following the webinar, you can call my office, 847-383-4870, or also submit questions on the website, schneider.house.gov. And please let others know who couldn't make this, that this webinar will be saved online as a video, so people can come and see it if they missed it, or you can refer back to it as a reference going forward. And with that, let me turn it over to Bo. Again, thank you for joining us, and thank you for all you're doing.
Thank you, Congressman. I appreciate the opportunity to be here today, and thanks to all of you out there who have joined to learn more about the programs that are available. If we go to the next slide, that'd be great. Primarily today, I'm going to cover the Paycheck Protection Program, although I would like to just talk briefly about the economic injury disaster loans and loan advance, just to give a brief update as part of my conversation. So both the Paycheck Protection Program and the economic injury disaster loan advance were part of the CARES Act. So there are some changes relative to that, and there are a couple of changes relative to the EIDL process. So we'll talk about that in a second. If we go to the next slide. So as Congressman Schneider mentioned, the Paycheck Protection Program is a loan program where you apply for the loan through a lender. This is not a direct program through the SBA. You apply with a lender, and eligible recipients may qualify for a loan of up to $10 million as determined by average monthly prior year payroll. I think one of the things to note is that, again, this is with a lender, and number two is the criteria for this loan are focused specifically on payroll and payroll documentation. This is not a credit analysis and a credit decision. Loan payments are deferred for 6 months, but the big thing on this program and a huge impact for small businesses and their employees is that this loan is 100% forgivable if at least 75% of the proceeds are used for payroll. And I'll talk about what payroll expense means. It's not just compensation. There are other things that are included in that calculation. Now, if you apply for the loan and you receive it, forgiveness can be reduced if full-time headcount, or if your headcount declines, or if your payroll expenses decrease. So just something to bear in mind in this process. So next slide. So eligible businesses include small businesses with fewer than 500 employees, as well as private nonprofits, 501c3s or 501c19 veterans organizations that are affected by the coronavirus or COVID-19. Certain industries typically have a small business size standard that is employee related that may be higher than that 500 employee limit. And if that's the case for your particular industry, then you look at whatever the higher limit is. So if it's 1,000 employees is the small business limit for your industry, then that's what you would use. Second caveat here is that small businesses in the hospitality and food industry with more than one location could be eligible at the store and location level if the store employs less than 500 workers. So just under normal SBA rules, affiliation would prevent this kind of treatment. However, the statute and the rules allow for special treatment to these two industries when they apply. Next slide. So how do you apply? You're going to go to so immediately you can use any existing 7A lender, which is an SBA lender, any federally insured depository institution, federally insured credit union, or farm credit system institution. In addition, SBA is onboarding other lenders, non-depository lenders, non-bank lenders into the program so that they can also support application and disbursement of these loans. The loan has a maturity of 2 years and an interest rate of 1%. Now, obviously, that would only apply if the loan was not forgiven. Lenders began taking loan applications on Friday, April 3rd for small businesses. The PPP program, as we call it, the Paycheck Protection Program, will open up for independent contractors, sole proprietors on April 10th. So coming soon. And that's, I think, another key element of this program is it's not just small businesses with employees, it's also sole proprietors, it's independent contractors, 1099s are eligible to apply. Next slide. You can go back 2 slides, thank you. So basically what's required, application, which is an SBA form 2483, you will fill that out. Primarily covers your payroll expenses calculation, your average monthly payroll expense calculation. It takes that average monthly payroll expense and multiplies times 2.5, and that is the maximum allowable loan under the program. Banks will work with you to collect appropriate documentation to demonstrate the payroll was what it was. So that might be your W-2s for your employees, or your payroll records, those sorts of things to provide evidence for that you had payroll expense and what it was. For independent contractors, 1099s, those businesses, likewise, if they don't have a payroll system that they use, you'll be looked at to demonstrate what your income was from the business, and that evidence could include things like your bank records. So lots of different ways that you can prove payroll and payroll expenses to help you go through that. On this slide, I do include example of, or the methodology they use to calculate the loan amount, just for your reference. I'm not going to go through it step by step, but bottom line is that you're going to aggregate your payroll costs, and we'll talk a little bit in a second about what can be included in that. You're going to subtract out any compensation in excess of an annual salary of $100,000 for those employees that make more than $100,000 in their salary and compensation line. Calculate the average monthly payroll cost, and then multiply it times 2.5. So it's pretty simple calculation on what you're going to do. Now on the SBA form 2483, you're also going to attest to certain conditions for your business. Are you in a legal business, a federally legal business? Have you defaulted on an SBA loan in the past? Certain criteria that you have to attest to in order to qualify as eligible for the program. I want to say that if you want to dive in deeper on the program, the best place to go is to SBA's website and download the interim final rule. It's a pretty straightforward read and talks you through every step of the program and is really the governing document for the program at this time. Next slide, please. Proceeds of the payroll protection program loan can be used for payroll costs as well as benefits. So think about things like healthcare benefits, retirement contributions, paid sick medical family leave, insurance premiums. Those sorts of things are eligible use of PPP proceeds, as are mortgage interest payments, rent payments, utility payments, interest payments on any other debt obligations that were incurred before February 15th, 2020, and or refinancing an SBA EIDL loan made between January 31st and April 3rd. So lots of different things that you can use these funds for. But again, I want to reiterate that the key element of the forgiveness component is that at least 75% of those funds are used for payroll and payroll expenses. So those other items there, mortgage interests, so on and so forth, would need to be, you need to look at how that will impact that overall 75% payroll expense and still make sure you hit that number in order to receive 100% forgiveness. And just kind of for context for everyone, so when you go to make the loan or you go to apply for the loan, you're applying with the bank. They're looking at all of the documentation that you provide in your application. Once approved, they disperse funds from the bank. So it's not federal funds at this point, it's bank funds. The SBA and the federal government are guaranteeing that loan. Now, a certain period into that loan, it's about 7 weeks is the minimum, according to the final rule. At that point, the bank working with you will collect documentation supporting your headcount and your the amount of how you've used those funds from the loan. They'll verify that at least 75% were used for payroll, and then they'll make application to the SBA for forgiveness. Once that happens, once the SBA signs off on forgiveness, then the Treasury will pay off that loan on your behalf, which means that you're free and clear from that loan. So that's kind of the process and what it looks like. A couple other key things that I wanted to touch on. As I mentioned, the program application started April 3rd. You had to have been in business with employees as of February 15th. So if you came into business after February 15th, then you would be considered ineligible. And then the last date of application for this program is June 30th of 2020. So that's a quick overview of the Paycheck Protection Program. I don't want to go too much longer because I know there are a lot of questions. So we can go to next slide. I'm not going to get too much into rehashing the Economic Injury Disaster Loan Program. However, we do have a couple of changes that happen. Max amount still $2 million, still a working capital line of credit with terms up to 30 years, 3.75% for small business, 2.75% for nonprofits. Next slide. Go ahead, next slide. Criteria for approval. Again, what we're doing, we've just installed a new application system last Monday. So basically this online application has you enter all your information. It's probably 4 or 5 screens, very much tells you which fields have to be entered and you provide that information. There's no upload of documentation. There's nothing else associated to that effort. We'll review your credit. We'll review other aspects of your application to make sure that you meet certain criteria, including can you repay the loan? Can you support that debt service in the long term? These loans, payments deferred for 12 months, so you've got some breathing room if you take the loan for a period of time. Collateral requirements have changed. It was previously any loan over $25,000 required collateral. Now that's $500,000. Personal guarantee was required for all EIDL loans. Now personal guarantee on EIDL is only on loans over $200,000. And I should touch on this. For the PPP program, there is no collateral requirement. There is no personal guarantee requirement. Next slide, please. Again, EIDL, for those of you that didn't see it, you come directly to the SBA to apply. Go to sba.gov/disaster. There's no cost to apply. There's no obligation to take the loan if offered. And you can have an existing disaster loan and still qualify for EIDL. If you're looking on the screen right now, that is an error. Maximum unsecured loan amount is $500,000 for the EIDL loan. So I need to correct that. Next slide. Okay, again, apply at sba.gov/disaster. I did want to touch on the application process. So as I mentioned, we just launched a new application portal last Monday. For those of you that applied previous to that, we had an initial online application. For those of you who applied through that initial online application where you went through a workflow online to submit your application and you were able to upload all your documents, you're good on the EIDL loan. However, if you want to apply for the EIDL advance component, and I'll talk about that in a second, you need to go back into our new online portal and apply there. So that's the first group. The second group is we had an interim solution where you would enter all your information in PDF forms and then upload those securely through a box.com secure file transfer site. What we're asking businesses to do there is if you applied that way, please go back into the new online portal, go through, fill out all the information in there, and then you can also at that same time apply for the EIDL Advance. Now the reason we're asking this is this will expedite the review of your application. It'll expedite getting you to the point of decision and get you to the point of disbursement on a loan if you are approved. So really important that folks that did the box.com upload, go through and redo the electronic loan application. Again, it should only take you 30, 40 minutes to go through that process. Third group is those that entered in the most recent system. And again, you're good to go. You shouldn't have to do anything else. It should be going through the system. If you have questions and you're like, hey, where's my loan application? Or I haven't heard anything, you can call SBA's Customer Service Center at 1-800-659-2955. Next slide, please. Next slide. Let's see, next slide. Okay, this is the last thing that I'm going to touch on for now so we can get to all the questions because I know there's a lot. The Economic Injury Disaster Loan Advance, what that is that's an up to $10,000 advance when you apply through the Economic Injury Disaster Loan portal. Basically, what it is you apply. Once we have a complete application in our system, I still need to get information on what comprises a complete application. But whatever, if you are approved for an advance on your EIDL, then that is supposed to be dispersed within 3 days of that complete application. Even if you are declined for the loan, you do not have to repay that advance. So if you're declined, you don't have to repay the advance. If you are approved for an SBA loan, that advance will be basically the amount of that advance will be forgiven on your EIDL loan. So as an example, if you were approved for a $100,000 EIDL loan and you received a $5,000 advance, then overall what they'll look at is that overall loan amount, your principal will be $95,000. So just to give you an example. And new applicants will automatically be considered for both EIDL and EIDL Advance. So next slide. Okay, so I think that's really all we wanted to cover right now, Congressman, and I know there's loads of questions that we can get into.
Congressman Schneider, I think you're on mute.
Can you hear me now?
We can.
Okay, I'm sorry about that. Bo, thank you for sharing that. We appreciate the update on EIDL as well as the details of the PPP. Let me now go to questions. The first question is from Brian from Libertyville. He says, my credit union's not participating and I can't figure out how or where to submit my application and documents. What do people do, Bo, if their bank or credit union is not participating in the PPP program and they have to go somewhere else?
Sure. So right now, what we're advising that businesses go to the PPP Lender Finder, which is an online tool to identify lenders that are supporting the program. That is our guidance as of now, and as we have more, we'll continue to update that site as we have more lenders join and look to participate in the PPP program. So that's what we're recommending right now if you're looking for another lender to support it.
Great, thank you. The next question's from Vernon Hills. Rob asks, our company has applied for a PPP loan. When will they be funded? Can you provide a general timeline as to how these might be processed?
Sure. So we, I would love to give everybody a timeline. I don't have a specific timeline, but I would basically work with your business banker to understand what their timeline is for processing. I don't expect that it'll be a long turnaround from an SBA perspective, but I don't have specific numbers to offer you right now.
And is it fair to say that each bank might be a little bit different because it is the bank who is effectively making the loan?
Yes, I would agree with that.
Got it. All right, thank you. Leslie from Lake Bluff asks, is the Paycheck Protection Program done on a first come, first served basis? Is there a chance we'll get shut out if we can't get online or the website is overloaded?
So oh, go ahead, I'm sorry.
I was gonna say, we actually have a related question from online. Can we submit PPP applications through multiple institutions in hope of at least one being accepted, or can we only submit one application per business?
Got it. So first question is, it is first come, first serve process. When you talk about can't get online or website is overloaded, the PPP loan is done with a bank or a lending institution. So so you'd want to reach out to the lender that you plan to work with and get a feel for what their timelines are and how they're processing these things, because each bank will be different in their approach and the systems that they use. As far as multiple institutions, again, you know, in this case, I can't really tell you what to do, whether you apply to one or many, although that may create some issues in the systems, because the PPP loan is only one PPP per applicant. And I don't know how the internal systems will look to deconflict that to make sure that people aren't able to access more than one. So, you know, I can't tell you what to do. I would just, you know, work with your business bank to figure out like how they're approaching it and, you know, what their timelines are going to be.
And Bo, is it fair to say, I know the intention of Congress was to make this a streamlined process with a simplified application form and speedy underwriting. So I would assume that especially a bank that has an existing relationship with the customer is going to be able to get that response fairly quickly. Is that a fair statement?
I mean, I think that's fair for sure. I mean, I can't speak to all of them, but yeah, it's intent. The intent of the program is certainly to make it really streamlined and fast.
Right, and I know from talking to a number of banks, one of their concerns is people trying to take advantage of the system. I'm not saying that's what John's doing, but multiple applications may indeed slow down the process if there's an existing relationship with the bank. Is that possible?
Yeah, I mean, I think, you know, what happens is if you start going multiple pathways, it slows it down for not just potentially for you, but for everyone. Because then everybody's got to do a lot more work to try and prevent multiple people getting multiple loans in a program where they can only receive one.
Right, it's only one per business. All right, thanks. The next question is from Dave online, and just an example of how I've been impressed of how closely people are studying the legislation and the substance of questions I've been getting on an ongoing basis. Dave's question is, I have several independent contractors who work for me. They're critical to my business. If I understand the Treasury's rules correctly, page 11, paragraph H, I cannot include their wages in my calculations for the PPP loan amount. Is that correct? If so, I'm in trouble.
The way I read the final rule, that's correct. Independent contractors can apply for themselves. Which, you know, to prevent duplication of benefits is why I'm sure they wrote the rule this way. The business cannot also apply for benefit from independent contractors.
Got it. All right, next question from Greg, also an online question. Is it true that one can apply for both an EIDL and a PPP loan?
It is true, but there are certain qualifiers to that. So in essence, the EIDL is a working capital loan, PPP is focused on payroll. If your intent is to try and use both the EIDL and the PPP for payroll, for the same expenses, basically, that's not a permissible use. However, if, for example, you use the EIDL for one purpose and then you use the PPP for payroll and payroll expenses, then that would be a circumstance where, you know, as long as the EIDL uses were permissible, that you could use the benefit of both.
Got it. And this is my question now, but I think it's important. Correct me if I'm wrong, Bo. The critical need to keep really good records as everyone's going through this process. Records not just of what you're applying for, but your expenses during this period, and to the extent that you can, any losses you're incurring this period. It's important to keep that tracked as closely as possible. Is that a fair point?
That's super critical, and you know, that's where your network, your kind of key advisors come into place with your accountant and your attorney and others and your banker too, to just help you navigate that and make sure that whatever you're doing, you're staying within the lines of the program.
Right, and it's important now. It's important later for these loans to be forgiven. So record keeping is important. The next question is from Jenny in Spring Grove. She asked, what date does payroll start qualifying for PPP? The day we get funds, the week of March 30th, the week of April 6th. How many hours of pay do my employees? How many hours do I pay my employees for? The average weekly from 2019, is that the metric?
So basically, the way the final rule reads is, I'll kind of work backwards on this. The way the rule reads is it's based on headcount and payroll expenses. It doesn't say necessarily how many hours you pay them or whatever. It's a financial number and then a headcount number. So I can't tell you what that means for you in your particular business. That's where you have to do the analysis on, okay, this was my payroll expense last year. This is what I would be eligible for from a loan standpoint. And then this is what I foresee my payroll being going forward, to, you know, so that you have a good idea of what that, whether you're going to meet that 75% benchmark or threshold for the, I'm sorry, lost my train, for the forgiveness. As far as what date does payroll start qualifying for PPP? So in order to be eligible to apply, you have to have been in business February 15th and had employees at that point. Now, as far as the expenditures and what counts, you know, I guess what payroll expenses count towards this, I can't answer that right now. I'd have to look back into the rules to sort through that specifically. But I think the intent, and I think that from my reading of the rule, the goal is to, you know, we want to start getting these funds out through the PPP to businesses, so that not only the business gets supported, but also so that those employees also are able to stay on and, you know, maintain their incomes and take care of what they need to take care of as well.
All right, thank you. And I just want to share, we've been joined by more than 400 people on this call. And to the extent that you're able to take notes, that's great, but we will have this seminar, our webinar, on our website for future reference. And if you know anyone who couldn't make it, you can refer them to the website as well, schneider.house.gov. The next question is an online question. This is from Kenneth. How is forgiveness measured affected if majority of employees are part-time, not full-time? To qualify forgiveness, can salary be redistributed away from owner full-time and shared with part-time workers? Actually, this is a great question. I've talked to a number of business owners who have taken their salaries to zero. so they can pay their employees. I guess two-part question. What if the majority of employees are part-time? How does that affect the measurement for forgiveness? And what if, as the owner, someone takes their salary down or all the way eliminates it to share with part-time workers? How would that work?
Right. So my reading of the rule basically says that the loan amount, right, what you're going to be eligible for is based on the historical, and it's in a dollar figure, and it's in a number of employees. The forgiveness component is again going to be based on loan amount that is that you're approved for, and number of employees. The rule does not specify how those funds are distributed, other than that no employee for the purpose of forgiveness can make more than $100,000. Or they can make more than $100,000, I'm sorry, but that can't be counted. Anything above the $100,000 can't be counted as a payroll expense.
Right. So as I understand it, I was talking to someone who has a law firm where the base salary for the lawyers are all above 100,000. It's just the first 100,000 of their salary is counted, as well as their whether it's people serving in their lunchroom or part-time workers. But the cap for any one employee is $100,000.
Right. Right.
Got it. All right. Thank you. Karja from Bannockburn asked, do banks have discretionary power as to who to lend and who not to lend to?
So from my perspective, I mean, banks have a lot of latitude to implement the program according to their internal policies. So they do have some discretion as long as it's not, they obviously they can't be discriminatory or, other things like that. But yeah, they have a lot of latitude on how they implement programs for sure.
Got it. The next question is from Sherry, an online question. What about freelancers like hairstylists who just rent a chair at a salon? They have no tax ID number, but still pay taxes at the end of the year. They're shut down and don't qualify for unemployment. Let me just qualify. Freelancers, in fact, do qualify for unemployment under the CARES Act, under the bill that passed it last month, and should be able to apply to the state's unemployment insurance office. We expanded the definition of that. That expanded definition only applies during this national emergency, but people who are freelancers, independent contractors, others do qualify. There's more information on my website, schneider.house.gov for that. And you can go on the website, look for help for individuals under the COVID-19 tab. So that's specific for unemployment insurance. But what about freelancers? How does the SBA programs affect them?
So from the standpoint of like an independent contractor, 1099, who maybe doesn't have an EIN, you're also eligible for a loan if you were an individual who operates under a sole proprietorship or is an independent contractor or eligible self-employed individual. And you were in operation at February 15, 2020. So I think the key here is you can certainly submit documents to establish eligibility, such as payroll processor records, payroll tax filings, or 1099 MISCs, or even income and expenses from a sole proprietorship. But for borrowers that don't have that documentation, you are able to provide other supporting documents, such as bank records, as long as they're sufficient to demonstrate the qualifying payroll amount. So again, as a 1099 independent contractor, like you're referring to, you are eligible for the PPP program.
Got it. Thanks. The next question is from Harlem in Glenview. He says, I'm unclear whether as a company in which I'm the only employee, so essentially sole proprietorship, I guess, will I qualify for forgivable loans? So how do sole proprietors or single employee LLCs, whatever it might be, apply for a forgivable loan?
Sure. So number one, sole proprietors and independent contractors are fully eligible, assuming everything else they qualify under, for the PPP loan. In order to apply, they would work with their bank of record or another bank that's assuming their bank is a participant, or another participating lender to go through the application process.
Got it. Jonathan has an online question. Does the 500 employee count include contract workers, i.e. gig workers? Also, if the head count, in calculating the head count, is it number of people or number of full-time equivalents? So if I have 2 part-timers sharing a job, would that be 2 employees or 1 FTE?
Those are some of the details that we're still waiting to have fleshed out from our policy folks. So I can't answer that question right now.
Got it. And the next question is for me that's related, just a chance to describe. So what we have now is the interim guidance from SBA. Is that correct?
Yes.
So I think that's an important distinction, that this is not the final guidance. So there's still a couple of details that are being ironed out, like that specific one we just touched on, whether it's headcount or FTEs. All right. Cindy from Highland Park has the next question. If I have already laid off some employees, is my company not eligible for this program? And I'll add an addendum. This is me asking the question related. Can people hire back their employees to qualify?
Sure. So I think the key kind of timelines that you're looking at is basically that February 15th date, as that's kind of the look back period. Basically what it says, you were in operation on February 15th and either had employees for whom you paid salaries and payroll taxes, is kind of the key metric there. So so if you meet those 2 criteria, you would be eligible, and then the amount that you would be eligible for would be that 12-month look back on your payroll expenses. As far as the, I'm sorry, could you remind me what the second question was?
So the second one is, do I have to hire people back, or can I bring people back that I laid off?
So yeah, so based on that, again, based on the loan amount that you receive, to the extent that you can have people on staff to meet that 75% requirement is basically what the rule requires, right? And the number of employees. Certainly if you were able to hire more than you had on staff, at the point of hire, even better. But that's my understanding of how it works.
Right, so go ahead, I'm sorry.
Oh, I was just gonna say, I mean, you're gonna wanna work through your lender on that too, and they'll help you walk through that.
Right, so to walk through an example, if I'm a restaurant and in February, everything seemed fine, I was fully staffed, I'll make up a number, I had 25 people working for me. On March 20th, when the governor announced that I would have to close my in-restaurant dining, I laid off half my staff. If on April 6th, I apply for and qualify for a loan, I can bring those staff back under the Payroll Protection Program and still being qualifying for loan forgiveness when everything's better and I reopen at full staff.
Yep.
Okay, great. Thanks, Cindy. Paul with an online question. We are literally a mom and pop store, so our paycheck is based on each month's profit or loss. How do we calculate the payroll? Plus, we're closed due to Illinois stay at home, so we have no payroll since we have no income right now.
Sure. So again, you're going to want to work with your lender in each particular instance, but the way the rule reads is that there is quite a lot of latitude to how you can provide information as far as your income from the business, which would be kind of consistent with your payroll. So what I would say is when you work with the lender that you're going to work with, is just going through what documentation they would like to see. Everything from maybe it's your financial statements and your balance sheets and all those documents that you maintain for your business, or even your bank records, as I mentioned a moment ago, may be appropriate and suitable to prove your payroll expense.
Okay, great. And the next question is, to go back to my restaurant analogy, or example rather. Jason online asked, if I have tipped employees, do I pay them the average wages if they were currently still working? They're receiving a tip wage and or a tip wage and their cash tips?
Right. So I don't know the answer to that question right now. Certainly, what qualifies as payroll costs is compensation to employees in the form of salary, wages, commissions, or similar compensation. Cash tips are the equivalent based on employer records for past tips, or in the absence of such records, a reasonable good faith employer estimate of such tips. So that's included in the payroll costs. So, but I can't say what you have to do or don't have to do, I guess would be my point. That's going to be the determination that you're going to have to make. And again, you know, I encourage people to reach out to their accountant and their other trusted advisors as they go through the decision-making process on how they look to implement this.
Great. The next question is from Patty in Waukegan. Can you apply for more than the amount that is determined on the Paycheck Protection Program loans? And if so, with whom?
So the PPP program calculus for a loan is pretty fixed. It's those average monthly payroll expenses times 2.5. If you need other loan resources to address other issues, that's where a program like the Economic Injury Disaster Loan or even conventional SBA loans may come in as a resource for you to meet your working capital needs.
Got it. Very good. The next question is from Andrew in Des Plaines. Is the $100,000 cap per employee salary or salary plus benefits, total compensation?
Sure. So the 100% cap only relates to the salary / compensation component. So you could have somebody who weighs in at $100,000 on the salary piece, plus they have additional benefits like healthcare, stuff like that, that you pay, that could also be included in the overall payroll costs.
Got it. All right, thank you. Another question, Josh, from this is an online question. Does a 501(c)(6) qualify for the program? These would be trade associations, businesses like that.
So our current guidance that we've received is that they do not, but that's, you know, again, what's called out specifically in the guidelines is 501(c)(3) and 501(c)(19s right now. But, you know, again, stay tuned to that as we get, so we have the interim rule, but normally we also have a standard operating procedure that governs actual tactical execution. So we're hoping for more information comes out on that soon that will clarify some of these things.
And let me add to that. I know that the legislation did not identify 501(c)(6)s. It was 501(c)(3)s. I think it's 501(c)(6)s, but these trade associations, it's 501(c)(3)s were included, but the associations were not. We have been talking extensively about trying to address that legislatively as well. We'll wait for the guidance from the SBA, but we're trying to address it legislatively as well. David online asked a question. Our 12-month average 2019 payroll is not representative of today's payroll because of growth. So this is a great question. Companies that are growing have more employees in 2020 than they had in 2019. What can you do? What can we do for a business that grew quickly in 2019?
Yeah, so that's another one of those questions that I can't really address. In reading the rule, it's pretty specific to how the calculation works, and it doesn't necessarily encompass that particular situation.
Yeah, I know we talked about it again in the legislation, and this is, at the end of the day, it is the SBA and Treasury who are writing the guidelines and the rules, but it hopefully will follow the intent of Congress. But we talked about what about businesses that had little or no payroll in 2019, they could use their payroll for the first 2 months of 2020. But we'll have to see what the specific guidance comes from the agency. So thank you. Alice asked, can churches with support staff participate in PPP?
Again, I believe that they can, but Actually, let me, we need to get back on this just to make sure that we're putting the proper information out there. So
Yeah,
I can't answer that.
The rules are still being developed on that, and I know there's been a good number of questions there, so we'll come back to that one. Andy in Highland Park asks, we are a caterer that lost income from our corporate clients at the beginning of February. We have a mix of full and part-time staff, W-2s, and event servers and bartenders, 1099s, so different types of employees. Are both types of employees eligible under PPP?
So full and part-time staff are, 1099s are not, because they can apply on their own.
Got it. Marilyn from Glenview asked, do you need a copy of just the first page of our last 3 years tax return to get the Paycheck Protection Program loan, or the entire tax return? It is several pages long.
The final rule only really addresses the payroll expenses and documentation supporting that. So I can't really answer that because I don't know what each specific lender, what specific documentation around the employee payroll they'll require.
I think that's also something they can ask their banker, correct?
Yep.
All right, Val from Riverwoods, what additional contracting and procurement opportunities with federal government will be created to support small businesses? And I'll touch on that a little bit because it's not part of the payroll protection program, but it's something that certainly within the small business committee we're talking about already. We're thinking just in general, we're thinking of the response to the pandemic in 3 phases. The emergency phase, which is what we're in now, trying to get people to a place where they can just get to the next point. The ability to mitigation phase is the second phase, just which will take us a series of months to get to the place where we're standing up our businesses again, people are going out in public again, and then the recovery phase. The legislation we've dealt with so far is almost exclusively dealing with the emergency crisis of the moment. That's why you're seeing these programs like the PPP program we're talking about today. COVID-4, so we had the 3 deals in March. The next one is already being called COVID-4. Will probably develop its own name, but it will be primarily emergency, but we're going to start talking about mitigation as well as recovery. And when we get into the full recovery responses, that's where we're talking about these additional opportunities. Bo, I don't know if you want to add anything to the question about opportunities with federal government for small businesses.
I don't have anything right now.
Okay. Eric in Morton Grove asked, one particular question I had was whether as an owner-occupied space, I would be qualifying for loan forgiveness on rent versus mortgage interest. My business is an S-Corp that pays rent to an LLC that I also own. So if I own my own building, separate from my business, but my business pays rent to the building, so I'm the landlord and the tenant at the same time, how would that work?
That's probably outside of the scope of my technical expertise, to be honest with you. I mean, I can't really answer that at this point. That's a little bit more detailed. I mean, that would be, because I don't know the rent forgiveness program
aspects of this. So the rent is, the forgiveness is really on the payroll, but it have to apply. So Eric, I'm sorry, we'll have to get more guidance on that as well. Returning to Northbrook, this question is from D. Are there any resources available to small commercial landlords, one building, who are foregoing collecting rent during this time?
So my perspective on that one would be probably looking at the economic injury disaster loan program, because that is a working capital line. So as you look at potential decrease in revenues due to rent forgiveness or at least rent delay, that that's the way that you can maybe meet your requirements in the interim while you do have that decreased revenue.
Okay, great. And this is a clarifying question. Bo, did you state that law firms are not eligible for a PPP loan? This is from Michael, an online question.
I did not say that.
Yeah, my understanding is law firms, professional service firms are eligible, as well as restaurants and manufacturing firms, etc. Right. Bill's question online, if you apply for and are granted the PPP loan and you ask your employees to come back to work and they are not comfortable returning to work due to the situation, and you do not use all the loan money due by the end of the 8-week period, is the loan owed at the 1% interest rate, or will the rate change with the bank or government's discretion? My understanding is that the metric is the number of employees you had before the crisis started, and then the number of employees you have afterwards. It doesn't necessarily have to be the same employees. Is that correct?
Yes.
So it is the number, not the names.
Correct. Okay. Number, not the names. And then, yeah, the loan is a 1% interest rate with a 2-year term.
Got it.
So if it's not forgiven, then those would be the terms that you would be responsible for.
All right, great. The next question is from Adora. It's an online question. She says, thank you for joining us on this webinar. Again, I'll repeat that. Thank you both for being with us today. I am a small business owner of an S Corp and accordingly monthly take capital distributions. Am I able to include my capital distributions on my PPP application within my payroll summary? Now, that's a great question.
Yeah, again, what I would do is I would work with your lender that you're working with to determine the distributions component. Distributions are not specifically called out in the final rules. So again, you know, in these kinds of circumstances, I would talk to your lender and work it through that with them, because it may be included, and that may be something that comes out as we just provide more guidance to lenders and borrowers on the program.
Great, thank you. Thomas online says, as a Lyft driver that is not driving now, do I report just what I made in the last 9 months and then extrapolate that amount to 12 months? So how would a Lyft driver, I guess implicit in that, who's only been working 9 months, what would they do to come up with their average?
Yeah, I mean, that would make sense to me, but again, we'd probably have to look at the rules. And again, I would just encourage you to work with your lender on that. That totally makes logical sense. I just don't want to make a commitment one way or the other because I don't have policy guidance on that.
All right, and with that, Thomas had the last question. We're at 4 o'clock. Bo, thank you so much. I can't tell you how much I appreciate this personally, but I know our folks on the webinar appreciate it as well. We had more than 400 people join us today, so thanks to everyone for all the questions. Is there anything we missed, Bo, as we keep this discussion in mind, ways they can follow up if they have further questions? Yeah,
so if I could, if you all have questions, certainly feel free to reach out to us at the Illinois District Office at illinois.do@sba.gov. Best place for the latest and greatest information is sba.gov/coronavirus. That's where we're constantly updating information, where you can find all the information that we have available right now for the EIDL and the PPP. And if you are somebody who has an EIDL loan, you know, don't hesitate to call the customer service center at 800-659-2955. Just again, Congressman, just really appreciate the opportunity to be on here and talk to people. I know this is a very
thank you. It's really, really helpful. So we really appreciate that. And just to remind everybody as well, not just related to SBA loans, anything that you have, any issue you have with the federal government, we continue to work, although remotely, everyone is working full time. You can reach us. The phone number for our office is 847-383-4870. The website is schneider.house.gov. I invite you to please subscribe to our newsletter to stay informed. We are sending out communications as quickly as we get information. We try to share it with all of you. We'll be hosting a similar webinar on this coming Thursday for nonprofit organizations. Again, that and this webinar are available online. You can RSVP for the Thursday webinar at the website as well, schneider.house.gov. And remember, this will be posted online. You can refer back to it as often as you want, and please forward it to anyone who couldn't make it. I know these are tough times. I will continue to say we will get through these times because of our communities, the strength of the American spirit, and the entrepreneurial spirit that each of you bring, and so many companies across our region, across our state, and throughout the country are delivering to address this crisis. Stay strong, stay healthy, and thanks everyone for joining us. Have a great day.